Okay, so not only have we made it to our last chapter, we've made it to the last video of our last chapter. So let's finish this accounting cycle out with doing the adjusting and closing entries and the post-closing trial balance. So the adjusting entries, remember we already did those on the worksheet in chapter 11, but we haven't actually put them in the journal yet and posted them to the T account. So we still have to do that so that our accounts will actually really and truly be adjusted. So here we've got that worksheet again. We're just going to go through and do the 5 journal entries for these 3 entries right here. So again, I'm going to encourage you to pause the video, flip back to the previous slide, try those adjusting entries, and then check yourself right here. You can see our entries that we've got right here, plus our entry for shrinkage that we did earlier. And now we're going to post these to those T accounts that we've got so we can see that we've updated all of our T accounts correctly. Now remember our closing entries, we've done closing entries before. The closing entry process is exactly the same for a merchandiser. The only difference is we've got a couple of extra accounts that we have to close out now. So remember to close out our closing entries, we're going to close all of the balance sheet accounts, but we're going to close all the revenue accounts by debiting revenue and crediting income summary. Then we're going to debit income summary and credit all of our expenses and our contra revenues now. And then we'll transfer the balance of income summary to the capital account and then close out withdrawals to the capital account. So again, we've done all of these before. This isn't new. I just want to point out the new parts. So now when we debit revenues, we debited sales, but notice we also debited that rental income account because that's another revenue account that we have to close out. And now when we debited income summary and credited all of our expenses, notice we also credited cost of goods sold because it's an expense, but we also credited our contra revenue accounts, the sales returns and allowances and the sales discounts. So we had to credit all of those to zero those out. So everything on the income statement gets zeroed out. And then we ended up with a credit balance and income summary. So we debited income summary and credited capital. And then to close withdrawals, remember we debit capital and credit withdrawals. Now I want to zero in on this closing of the capital account, closing of income summary to capital. So if we look at income summary, we originally credited it for 95.2, that was for the revenues. We debited it for 66,955, that was for the expenses and the contra revenues. So that left us a credit balance of 28,245. Remember that was the amount of our net income from the previous video. So now I'm going to debit income summary and I'm going to credit capital. So capital did have a balance of 7905. I've credited it for 28,245 and I'm debiting now capital for the amount of withdrawals. And so my ending balance in capital, this 27,550, this matches the balance on the statement of owner's equity, and this is the amount we used in the balance sheet. So the last thing that we need to do is prepare the post-closing trial balance. That's going to be prepared from the general ledger from the T accounts. So all accounts that have a non-zero balance will be listed here. So that means only accounts that appear on the balance sheet will be listed. There shouldn't be any revenues, there should be no contra revenues, there should be no expenses, and there should be no withdrawals. Only accounts that appear on the balance sheet should have a non-zero balance now. So here we can see we've got our post-closing trial balance. We've listed our assets, our liabilities, our capital account at its new updated balance. And these become the beginning balances of next year. Well, I hope that you have enjoyed this class. I hope that you've learned a lot, and I hope that you will go on and continue taking some more accounting classes. If you haven't taken Accounting ACNT 1313, that's an Excel course. It's really not even an accounting class, to be honest. That's just between us. Don't repeat that. But it's really an Excel class that focuses on those business functions of Excel, and it gets you ready to take the Microsoft Office Specialist Certification exam, which is a highly sought after industry certification. We also have ACNT 1311. That's a QuickBooks course. Now, the titles of these courses, because they're named by the state of Texas, so ACNT 1313 is titled Computerized Accounting, but it's Excel. And ACNT 1311 is titled Introduction to Computerized Accounting, but it's QuickBooks. QuickBooks is an accounting software program that a lot of small businesses use to keep track of their books. And so now that you've completed this course, now's a great time to take that 1311, that QuickBooks course. So I would really encourage you to seek that out now. I'd be happy to answer any questions that you have about it. And if you want to continue your accounting education, the next course in the sequence, besides QuickBooks, which I would encourage you to take QuickBooks, is ACCT 2301. That's Principles of Financial Accounting. And that's really this course, but on a corporate level. So think accounting for corporations, large businesses. If that's something you're interested in, that's that transferable accounting course that would go to the universities if you're interested in that, if that's your focus. And that's really the next course in the sequence, in addition to your Excel and your QuickBooks class. Good luck on the rest of your future endeavors, and happy accounting.